Welcome everybody to another live stream for NIO Earnings. The earnings have just been released. This is how the report looks. I haven't had much time yet to look through it, but I will do that live here. Let me just first get the tag right. I need to disable one of the tabs here. Yep. Here we go. Let me know in the comments if everything works out with this sound, and then we can jump into it. Hope you can all see and hear me clearly. Just some setting of the stage here. This will be, as always, a walkthrough the earnings report, the news release. So I will give you an analysis of that. I will contrast it with my personal expectations versus what we see in the report. I'll possibly take some questions by the end of the session. I'll later on will also live stream the earnings call, so that will be a separate video. Please make sure to be part of that one as well. So you will find the live stream later on after we finish this one. The second live stream is always interesting because the earnings call is giving much more context and nuance to the report. So make sure to join that. For those who are not subscribed yet to the channel, I would appreciate if you subscribe to this channel and hit the notification button, so you will make sure that you can also get the link for this live stream. And additionally, you will be able to comment in videos like today. So right now, only people who have subscribed to this channel for a year are actually able to comment here. So I appreciate the long-term members. As you know, this channel is all about long-term thinking, and we might need some long-term thinking for NIO here. Okay. Looks like people saying the sound is okay. I'm just waiting a little bit until the room fills up here. So I'll have my Excel sheet as always. That's the business case with my estimates, and I'll fill in the actuals. Let me make that a little bigger already. So that's going to be the Excel case. We will have the report, which I will go through. I'll go through some analyst estimations and takes. And then I'll also, this time I also have something else. Well, it's just a little bit extra to explain my personal expectations. Where do we have it? Here we go. Yep. Because actually I have, around this Patreon community, and I did explain my estimates for Q1 in the Patreon community, so that was exclusive content. And I'll get back to this sheet in a second. So looks like we're getting filled up here with people watching. That's awesome. More than 160 people watching. Please make sure to share this video in NIO groups or on Twitter, on X, on wherever you think people might be interested, and join this call to discuss the NIO earnings report. And I think now we can actually start looking into that. Again, for those who are joining us later, I know in the US people are maybe just starting to wake up. This will be available as a recording, as always. And the same for the earnings call later on. It will be a live stream, but it is available as a recording as well. Now, with that, I think we are ready to go. And let's start diving into this report. Maybe first, let's start with the top line here. That's Seeking Alpha. Lots of analysts like to go there. Headline is NIO reports mixed Q1 results, initiates Q2 outlook. So we basically get a miss here for the revenues. Yep, and a slight beat on the bottom line here. So that's always the most important one. Like, what's going to be the headline here? Seems they are going for mixed this time. So some good, some bad. We'll see that in a second with certainty. And here already we see there's a miss on the top line and a beat on the bottom line included. For some of the estimates out there, I'm referring here to a software called Koifin, which I like to use quite often. It is for the next earnings that those analysts that are listed in there, it might differ from platform which you're using. If you're looking at Yahoo or somewhere else, it might be different, but seems like they expected minus 657 here on the EBIT and revenues of 1.44 billion in consensus, on the average, right? I'll show you my estimations, and I've been quite conservative, to be honest, and we'll now compare it to the results that have been published here. So how should we do it? Maybe I will just go live and plug in those actuals in here in comparison to what I have estimated. So you will see here Q1, this column here, Q1 2024 estimates versus the actuals, what will be reported. And we can go through one by one, and I will also give you my reasons for my personal estimations regarding that and how it's turning out. So vehicle sales have been 1.16 billion in the first quarter. So we always know the vehicle sales in terms of the cars sold, right? But we don't know the revenues exactly. And as you can see, I've expected 1.2 billion. So I had higher expectations. If I go into my expectations sheet for the revenues, you'll see for the negative assumptions here prior to this report, I said, well, first of all, revenue is going to be low for Q1. That's the seasonality, right? I'm referring to that. And I said, most likely, we're going to see low average sales prices due to the ramp off of NT 1.0 cars. Yes, if you remember, in Q1, we still had, first of all, very low sales here. This is the updated sheet. But also still quite some of the old models that they kind of sold at discount. And so I estimated that we will have not as good numbers on the revenues based on the fact that I think the ASPs will be quite low. What I have here is 41,000, but maybe let's jump into that. We can possibly make a quick calculation here. What's the vehicle sales? I just get that from the income statement as I've just updated it here. And the vehicle ASP will be well below 40K. So it's going to be 38,600. So maybe my estimations here on the negative impact of those lower revenues due to sell of the NT 1.0 platform and to other due to given other discounts and benefits was not conservative enough, given the fact that the revenues came in lower than what I have anticipated here. Let's see what we have for the other sales. I think that lots of people have been looking towards a certain payment by 447 or 47. Where's the other sales? I haven't, as I said, this is all live. I have not looked into that before. So it came in at 211, and that's as well a bit lower than my personal other sales estimations. I was kind of just shooting from the hips here with my estimations with the 220 and said, it's going to be lower than Q4, but maybe it's kind of, not as low as in the past. So definitely more than 200 million based on the fact that the fleet is now larger. We have more, for example, swapping revenues and fees coming in and so on. And I must say, I did not include a payment for 7. So this licensing agreement that we got from an external company that is owned by the Abu Dhabi government that has made a license deal with NIO and said there will be upfront fees. So far, I haven't looked. I need to read the text later on. I haven't looked yet whether or not that's included in something in here. Maybe you can point it out in the comments if you already read through the report. I'll just continue here with some of the numbers and my estimations. So I said for the sales margin, so the vehicle margin, I'm expecting 10% of vehicle margin. Let's get back to my sheet, which I used to make my earnings outlook in the Patreon network. By the way, currently I have closed my Patreon community. So it's around 300 investors there that are chatting on a daily basis and which get exclusive content. It's a way to support this channel. If you want to support this channel, you can use the YouTube membership function, and you can either give a tip here, or you can become a member. I will be looking to make changes to the Patreon community. For now, I like to keep it exclusive. I think we have a nice bunch of serious investors, and I'm looking to make changes and open it up at some point later on. But that sort of content is where I gave an outlook on the expectations, and I said vehicle margins, I'm expecting 10%, because it's likely going to be lower than in Q4 2023, which was 11.9% due to the lower sales and the NT 1.0 ramp off. So that's why I assumed it's going to be lower. I said it's possibly maintaining a double-digit vehicle sales, because I'm assuming 10%, right? And therefore, it could be an increase of 100% year over year. We might see a positive surprise for the JAC effects. You might remember that NIO has taken manufacturing in-house. And so this was kind of, they usually made payments to JAC in order to let them manufacture the cars. And that payment was based on each car sold. And so you would assume that if NIO is taking that one in-house, you will see positive effects. Now, let's look at the vehicle margin. It came in at 9.2%. So that's pretty bang on what I said. Unfortunately, it's not double digit, but I think with the margin, I'm kind of where we are. And so, yeah, I'm maybe for a little bit of an outlook, I'm still expecting, and we might hear more about this in the call. I'm still expecting that we are going to grow the vehicle margins going forward, simply of some of these effects, but mostly because, for example, for Q2, we'll have much higher volume. We will therefore have better economies of scale. I think we now certainly will see the JAC agreement benefits kicking in, and some other things. So I think going forward, I'm very optimistic for Q2 that it will show better margins than this one. But on Q1, I was still quite conservative. So let's jump to the most important part. So obviously now my gross margin is off at 10%. It's only at 4.9%, given that I was off on the other sales and vehicle sales together, and also the vehicle margin came in slightly lower. So on the top line, I had higher expectations, and it's actually lower, similar to what's reported here by the market, that the revenue came in a little bit lower than the analyst expectations. Actually, if you look at this one sheet, it's definitely not a 1.44 billion, right? And this, yeah. So anyways, that's where we are. But let's look now on some of the cost side things, and then later on I will also go through the text and see if there's something specific that I find in there, and maybe some of the explanations that are in the report as well. So next is research and development. I had it at 400 million, came in at 396 million, bang on. And SG&A, I had it at 500, but it came in at 415. So let me first give you my rationale for my numbers here. So on the R&D side, I said on a positive, we've got NT1 to NT 2.0 transition is completed. So basically the platform shift is done. And I think there was lots of cost aligned to that. And now this kind of cost of this major transition should be phasing out. We've got the Nio phone done. It's developed. Now we only need iterations on it. So we've seen that was also part of the cost cuts. And we had a slow build out of the battery swapping stations. Maybe they aligned some of the R&D costs towards also the battery swapping build out, or like coming up with the new swap stations and so on. Maybe that's already mostly behind us. And on top of that, there wasn't a big build out, and the layoffs actually a positive in the end, but may take some time to work in. On the negative, we still have new models coming up, like the Envoy L60 and the Firefly R&D costs. So, despite the fact that this transition is over, there are new brands coming up, right? So R&D costs related to vehicle testing, tooling, engineering, compliance, verifications, all of that stuff. This will take still some R&D chunks here. So that was my basis for estimating that in Q1 we will get to 400 million RMB. And in fact, we got there right on point, 400 million RMB. For SG&A, I had actually higher estimations. I thought we're going to spend 500 million. And my reason for that was we might still have some Chinese New Year promotions going on. And we also need to consider the fact that, yes, we have layoffs, but we need to pay those people a couple of months more in order to lay them off and stuff like that. So kind of, you see some of the positives are kind of canceling out the negatives. And so it was my assumption that we might be just slightly lower than what we've seen in Q4. So kind of better than Q4, but not that much. That was kind of my assumption for all of the operating expenses. And it seems that NIO was a little bit more cost cautious here with just 415 million during this quarter. All in all, you'll see I estimated a net loss of 756 million. Let's see where we are. The net loss came in at 718 million. So less of a loss than I personally expected. I have to say, though, I was very conservative with my Q1 estimations here, despite you would argue, yes, I had higher revenue estimations, but I had low vehicle sales estimations here. I had still some high expenses estimations here, and I also did not estimate that we will get a payment, or at least I didn't have it in there, a payment for the 4.7 license fee. So maybe I have to look through the comments here, but I have not seen anything yet here with the 4.7 license agreement. But first of all, yeah, let's look at the outlook. I just saw that deliveries between 54,000 and 56,000 units. At this point in time, obviously, they know already what they will be looking for. So 54,000, that's actually, more or less between 18,000 and 20,000, more or less in June. 18,000, 20,000, that's what they're guiding towards June, more or less, couple of vehicles plus minus. All right, so this is kind of the big overview. By the way, we're now at almost 400 people joining us live here. Welcome if you tuned in later. This is the live stream for the NIO earnings report that has just been published. I've just walked through some rough figures, like first of all, what the markets are saying on the headlines, and then also some of the metrics and how they are comparing to my personal estimations. And I'll look a little bit deeper now in the next steps, and also go and do some Q&A before I round up this live stream and hop onto the next live stream, which will be the earnings call with Li Bin, where we get much more insight, I think, than this actual report. Maybe let me summarize it at this stage before going into more of the details here on where this report is. I think it's mostly in line. It's pretty much in line with the investor expectations here that I've shown you. It's pretty much in line with my own personal expectations of what I've estimated here. It's actually on the bottom line better and beating the net income numbers. I have to say, my estimations have been quite conservative, so I was not hoping for a lot and a good report or something like this. So this report pretty much reflects that, I would say. But now let's look at some of the tricky stuff in there, or what we can dig up there that might be interesting. So vehicle sales, we knew, I talked about that. Vehicle margin, I talked about it. Gross profit, loss from operations. Here's a little bit of text, but that's just comparing the quarters. Yeah, let's see if we find something special in this report. I saw there have been some remarks, recent developments. So they highlight the April and May deliveries. I would do so as well because they have been actually pretty good. So let's bring up this chart. If you're watching my videos, then you know this chart already. I'm keeping track of the so-called daily run rate, which I'm doing kind of as a setup here, where I divide deliveries by the business days. Why business days? Because there are some off months in China where you have pretty long holidays, and yes, some of them are accounted for and made up for, and yes, sometimes they work on Sundays and so on. But I think it's just giving us a better perspective than actually just going and looking at the deliveries divided by the days and so on. So anyways, the trajectory is up here. It's quite volatile and fluctuating around the trend here. We're not exponential yet. Hopefully that will be starting with the sub brands at some point, not this year, I guess, but later on. Hopefully this curve will start to bend up here. We're starting to make higher lows and hopefully higher highs. With the indication now, it will be maybe the next month will be pretty much like this. Who knows? There might be a little bit sandbagging, knowing the numbers, so it might be even a little bit higher than the last month. But personally, you could always see also those sales reverting back to the mean, to the trend line here for a bit, and reconfirming that. For me, the important part is that going forward, we make higher lows, meaning that we're not falling down. And given how the whole seasonality is playing out, I think that's going to be likely for the next month and quarters, despite the fact that we're going to have some months below 20K monthlies. I think still the overall chart will be trending up here, in my opinion. So yeah, what else did they highlight? The launch of Envoy and its first model L60. Yeah. En voyage, le Dao, happiness. Yeah. Envoy resembles an upward path. Let's hope the stock also will resemble an upward path at some point. All right, so that's just pure description, nothing important here, nothing material. What about a share lending program for Singapore Exchange? They have lent up to 2 million shares to the Singapore Exchange. I think that's kind of a liquidity program. Maybe there's not lots of shares being traded in Singapore. Now they lend out some shares. Yeah, I don't see, well, maybe I'm not technically familiar enough with that, but I don't see any material implications of that. Investment in Nio Power. Okay, wow, they are highlighting this. It's interesting. So, entered, yeah, Wuhan, so local government invested in Nio Power. 1 billion in cash, RMB. Okay, finally we get this information was missing. So NIO has basically given a 10% equity interest in Nio Power to those investors, and if they give away 10 billion, sorry, that's interesting. Let me see what's the conversion of that. Like if we are at, well, basically, if they give away 10% in equity, then the equity, the the valuation of this round was at 10 billion RMB. So 10 billion RMB, Chinese RMB. Where do I have it? It's around 1.4 billion USD. So interesting, Nio Power is currently valued at around 1.4 billion RMB, more or less. Conversions could be wrong. There could be a little bit of those details in how this round was valued and whatever, but that's interesting. So why do they put this in this report here is, first of all, they're showing the market, look, first of all, there are investors who are interested in doing that. Second of all, maybe also to give a sign to the markets, look, guys, you're not valuing our assets properly, because there's people willing to give Nio Power money at a 1.4 billion valuation. It's quite a substantial part of the Nio stock market cap currently, if you think like that. And also to sending a signal to the outside world, look, we're open for other investors and we are able to raise in China. So we can not only tap into the markets in public listed stock exchanges, but also for our companies that are incorporated in China, we can raise local capital. And by the way, there will be some additional value to these investments other than just the equity that will be raised. And obviously, if that company, which is under the holding company of Nio, so it's consolidated, if that is now in a better financial position, that means there might be less drag in future Nio earnings reports on some of the R&D costs, for example, things like that, right? So in my book, that's a positive. You would argue on the negative, yeah, they're giving away 10% of the equity interest, which means 10% of the future potential earnings of Nio Power is going to those investors instead of Nio. However, I would argue, and I said that on X, and I think also in my last video, I would argue that there is not much goodwill and growth priced into Nio currently. It's priced conservatively around, where the market currently is, in a sense that startups are not in investors' favors, loss-making businesses are not in investors' favors, and so on and so on. So yeah, that's interesting. Nio Power valued at 1.4 billion USD. It's nice that I put it out there. I like that. I think that's a good point here. CEO and CFO comments. I'm not sure if there's much in there. We're gonna hear more from them in my next live stream. Okay, so speaking about the upgrades, which I saw during the Beijing Auto Show, the ET7, yeah, it's nice, the update. Will it be game-changing? Who knows? I think it's a good car. Okay, going into the mass market. Talking about operational efficiency. Talking about the partnerships, that's great. Standardization and adoption of battery swapping, yep. Would love to hear more about profitability of the battery swapping network, but again, this is a hint. Why would an investor pick up 10% of the equity stake in Nio Power if they were not interested in future profits of the Nio Power business? I stand with my opinion that this year might be the year in which investors start focusing from, there will be a shift in narrative away from Nio Power is just pure cash burn towards, oh, this is actually an investment. Can we build more of these swap stations, please? How can we benefit from all of these revenue streams that you're creating. And by the way, you're also signing up lots of these other partners there, and they're gonna build the swap stations for you, and they will pay you for actually, building cars on the platform. And yes, you've got this license fee coming up, and all of that things. I think it will possibly click this year. We're not there yet, but I think this year might be it. All right, I think there's not much in here. Let me see if they have any additional insights to the R&D expenses. Decreased design and development costs, so that's maybe the phase out of the NT 1.0 platform and the transition being done. And the decreased personal costs, so basically some of the layoffs are factored in. Cool. SG&A, excluding blah, blah, blah. Increase in selling, the increase in personal costs related to the sales function because they hired more salespeople. The increase in expenses related to company sales service network expansion. The question would be if there's already maybe some Onvo service network expansion included. My guess is yes, there will. Increase in sales and marketing activities. That's what I talked about regarding the Chinese New Year. Wait. Okay, they're now year-over-year decrease, yeah. Okay. Yeah, I don't see anything about the license. To be honest, the cash position came in lower than I expected. I have it at 7 billion. I was actually expecting that, yes, they have this convertible bond to service, was 300 million in Q1. And then given my estimations for net losses and so on, should be at around 7 billion cash. So that's lower. It's not good. 700 million somewhere. Yeah, we'll see. That's fluctuating a bit because of the way the balance sheet works and accounting and, maybe some debt servicing and so on. We'll see over the next quarters, but I thought it might be more up. So that's definitely a negative here in this report, I would say. But overall, again, this report seems to be very much in line with my personal expectations, even with analyst expectations. I see in the comments stock is down a little bit. Let's do a little bit of stock price esoterics here. I don't like technical analysis, to be honest, but I still do it. So having a little bit of a head and shoulders pattern here. We're dropping now back here to the lower band of this downtrend channel here. I don't know. I mean, given what I just said before, I think the stock is not currently priced for the recent growth that we've seen. It's not priced for any goodwill, like with the example of Nio Power. So it's been priced quite conservatively going into these earnings. Yes, we don't see a great improvement of the net losses yet. That's true. But as I said, I personally did not expect that to happen during this quarter. So I was pretty much in line with that. So I think going forward, Q2 will possibly be just that. So I think the stock has traded like it has because the fact that people have been as conservative and pessimistic as I have been, just how I've just outlined my expectations on these earnings. But so now it's done. Investors should be forward looking, and the next quarter is going to be much better, in my opinion, on some of the top line, like the sales, the vehicle margins, and with that, the potential also on the bottom line, because it's you simply make more money and helps you to pay some of the overhead cost, right? So that's the way I'm looking at it. I don't see anything extraordinary in this report other than that. Let's license. Nope, nothing in here. 47, no. 47, nope, nothing about that. So I didn't have it in my expectations, and it doesn't seem to be turning up here. Let me know if I missed it. Maybe you found something in this report that I have missed, but overall it looks like a pretty standard, pretty much expected report. Let me go maybe through some of the comments here in my Patreon community. Let's see how the general mood is here. Weird that there's no 4.7 on here by Joseph. Yep. But yeah, I did expect that, to be honest. 4.9 margins, but that's the gross margin, maybe. I think that 9, 10-ish vehicle margin is pretty much my expectations. Yep, Alan just saw my point here as well. Margins went down because it's hard to discount old models to get rid of them. This is why, in my expectations, I also had the margin at 10%. It's pretty much good. Cash position is not concerning. We have more than 6.3 billion in cash. That's a long run rate. And given we're now going to see narrowing net losses, in my opinion. So this will hold us for quite some time. But of course, you can always be concerned. I mean, there's debt to service and so on. But no, it's not an urgent matter. The problem is the way to raise the money for it. That has caused a problem for existing shareholders. But now they have the money. Yep, good point, Benjamin. Vehicle margin is down from Q4, not from Q1 2023. And that's what I said here in my expectations. Again, it could be a 100% year over year. And that's where we are, more or less. And it makes sense because you sell less cars than in Q4. So you have, not as good unit economics and so on. You need to get rid of the old cars. All of that is dragging on your margins. What is a concern to me, to be honest, is that I've been off with the average sales prices. To be honest, that should move up, hopefully, again above 40K US. That's certainly a negative here in the report, in my opinion. It looked like it will be bottoming out here around these metrics here, but that report was quite low. So I'm hoping that for Q2 we can actually jump in there again. Yeah, we'll see. That's definitely something to watch. All right, let's look at some of the live comments here in the stream. By the way, I have to look what time the earnings call will be. I think meanwhile, a little bit of investor education. You can go here and go to news and events and subscribe to their upcoming events. You will get an email notification. I usually do that. So when is the conference call? No, this is the first quarter conference call. Yeah, usually they have a news release for that. Should be in 1 hour or something. I'll do a separate live stream for the earnings call. Just want to be sure that I'm not missing it. So in case it's earlier, let me know in the comments, please. All right, let's see some of your comments and suggestions here. Yes, please hit the like for the channel, helps to get it in front of more people. I appreciate that. By the way, I really enjoy that 500 people are tuning in live here in the session. Again, I gave my summary that this report seems to be largely in line with investors' expectations, both my own as well as the consensus by the analysts out there. I think the report is pretty much what it should be. It's not a great report in terms of if you're looking for something spectacular or something really positive as a surprise, then this is not the report, but it's also not a bad report in my point of view. It's pretty much where it is, and everybody knows now we're looking towards Q2, which will be a good report. So if Q2 is not a good report, then I would be concerned personally, or then I would be disappointed. Today, by this report, I'm personally not disappointed. And yeah, the outlook is good. I like that. And yeah, maybe one of my highlights here, if you want a positive highlight, it might be this little piece of information here about 10% equity stake in Nio Power, which I think is an interesting sign. It's cool that they put it in there. And yeah, let's see some of your comments here. Yeah, I agree with you. I hope we get some information about swap partners will pay Nio. So far, all of these partnerships, as I said, the whole goodwill is not priced in. There is zero appreciation for all of the partnerships that are going to happen. So it will take time until Nio shows either telling us what's going to happen in terms of revenues and so on, or if it's actually in the balance sheet. But currently it isn't. And so stocks simply not reacting to that. Investors are not excited about it. But if you're following this company for the long run, I think it's quite exciting. I think also against the context to the Beijing Auto Show, in which I have been, I see, I said the topic for me has been that, it's not the auto show of the startups, like including the Auto, Xpeng, Nio, and so on. They have been pretty stagnant. The others are now catching up a little bit, like Legacy, Chinese Legacy, and so on. And I don't see many doing the same deals like Nio is doing with all of the partnerships. And now we have people investing in Nio Power. We have all of these partners signing up for the battery swap network. So, people are paying attention and things are happening. It just will take some time, but it could be a winning strategy. I'm not saying it will be, but it could be, because if you're now in the position of a startup, you want just to simply compete on price and functionality and so on. I think it's very tough out there. And now we have Nio sales picking up again, so they are getting better at sales and marketing. Whether or not that will cost us also will be something to see from the Q2 report. But currently things are actually finally going into the right direction, despite the fact, yes, we still have to book quite a loss in here. But I mean, again, it's expected. It's starting to narrowing, although it's a slight one. But I think with the next report, hopefully, fingers crossed, we will see this figure dropping. And from there, if they can compete in one trajectory, and ideally the CFO today in the earnings report can give us a plan for it, or just some more hard facts on how they're gonna do that, despite launching new sub brands and despite the challenges in the industry and so on. That would be what investors are looking for, like the institutional investors and so on. So you say the guidance for June is surprising given the hype around the recent placed new orders. No, I think the guidance is just fine, to be honest. I just explained it with my chart. I think we will at some point see a reversion to the mean. So expect some to this trend line. Expect some months in which we will also have fewer than 20K sales. It's just not going up every day and straight in a line. That's unrealistic. As long as we make higher lows and higher highs, that will be good. So the guidance is fine. And It's actually also, again, for the Q2, the revenues, not the revenues, let's say the deliveries are above my personal expectations that I had going in, and which I talked about before on the earnings report in the Patreon community. That's true. The opportunity cost of being in the stock for the last 3 years have been massive. Yep, because you could have made money elsewhere, but, that's investing, right? You need to align the funds and your portfolio where you want them to be, and take risks where you can take risks, and split it in a way how you are fine with it. And if you are feeling you're missing out and you cannot wait 3 years and longer, then NIO is not for you. And maybe other stocks are not for you. Maybe you shouldn't even be picking stocks. Maybe you should just invest in ETFs. The thing is, what I like about NIO as an investment case is that this company, in my opinion, I'm not saying this is the truth, but in my opinion, NIO has this huge upside opportunity as a company and evaluation. And I can understand the company, and that keeps me invested despite the fact that we're going through this huge volatility. Volatility is your friend to the upside, but it's really a shit show to the downside, right? As we're experiencing now. But it's kind of the price you pay for. So it's difficult, definitely. If you don't get a nice entry into the stock, or if you're not able to average down, or if you're not able to hold on because you need the money, or like this commenter here, you want to allocate the resources elsewhere, then it's quite difficult. But on the other hand, there are not many companies that can make 10x increases, or where you can actually commit a large enough of a personal stake in your investment that it could ultimately be even life-changing. That's the way I think about it. But I mean, I'm possibly more of a risk taker than other people in terms of investing. So it really depends. And that's why I'm always saying on the channel, it's not financial advice. I can only tell you how I'm personally thinking about it. In my position, I don't know your personal financial situation. So I can't pull the trigger for you. You need to do your own due diligence. So just a couple of thoughts about the stock price. Here's another comment. The investment on Nio Power is coming from government. Yes, that's local government that's investing. Like the governments in China are really almost like some venture capitalists. In the end, it was also Hefei that bailed out Nio. But on the other hand, I'm also always say, don't expect investors to bail out, like government investors to bail out Nio in every case. It's not going to happen. Right. You want to see a loss below 500 million. I agree. And I think we will see that this year in one of the quarters. Maybe already the next quarter. I don't have my personal expectations on the net losses for Q2 in my head currently. I don't remember, but it could get close to 500 million the next quarter already, I think. I agree, Carlo. I see this also as a turning point. Next earnings should be better. I agree. There are still, like I said here in my, this is why I made this chart. So there have been positives already for this quarter, but on the other hand, there are some negatives that are kind of canceling them out. Yes, we have the layoffs, but we have to make severance compensation payments. Yes, we have less of new models coming up that need R&D, but no, we still have more models coming up with Onvo and the sub-brands and so on. So, this is why we're currently where we are, kind of stagnating. But going forward, this has the potential to become better. And maybe just a few words on the license fee, which I did not have in my expectations. Again, here in my case, I did not put it in anywhere here because I simply did not expect it. But maybe it will trickle down at some point when this is all up and going, in terms of this will be related to the amount of vehicles that 47 will be selling. And yes, there will be some sort of an upfront fee, but let's see. Rome isn't built in a day. All right, maybe the last question that I'm taking here until I'll quit this live stream and hop on and make another live stream for the earnings call, which should be around the corner. Your thoughts on the third factory? Why not double shift on F1, F2 instead of spending money on a new factory? Yeah, I've seen the rumors yesterday, and we've been discussing it in the Patreon community. To be honest, I said in the community that the news that I saw didn't really make sense. The news, for those who haven't seen it, but the news was basically that NIO got permit to build a new factory, and it has 100 million of capacity, not 100 million, 100,000 of capacity, and it would produce Onvo. So there are a couple of things that doesn't make sense there. So that don't make sense. The first one is the factory has been built for quite some while. I've, in my opinion, or according to my knowledge, this is actually an existing factory which they bought, and they're possibly doing renovation work there or setting it up. So it's not an entirely new factory, in my opinion. Second of all, it doesn't make sense to me that this is just a 100K capacity factory if it's for Onvo or Firefly, for one of these sub-brands. And third, it doesn't even make sense for me to build Onvo there, at least not the current model, because I know for a fact that in the F2 in Neo Park, they're currently building the Onvo L6 trial production. So if they were to start it in F2, build a factory in F3, and then move it over there at some point, that sounds quite messy. Maybe one of the reasons why I'm quite conservative on the Onvo ramp. I don't have high expectations when it comes to that for this year. I do think in the long run this will benefit us, and I think it will be a nice boost. And I think it's, yeah, by now I'm convinced it's necessary and it's a good thing. But if they are switching between lines and factories and stuff, with the whole supply chain and even the tooling and all what's going on with different brands and so on, it doesn't sound like a smooth thing for me. So if that were the case, which I'm questioning, then it's already sounding messy. But I'm suspicious of that. I think F3, so the new factory, will be for Firefly. That would make a lot more sense. I think the capacity will be higher than 100,000. And I think the first Onvo car will be built in F2. I also don't think the capacity for F2 that has been rumored yesterday is correct. I think it's 1 million of capacity in F2 alone, plus 300,000 in F1. Plus, I think F2 has the capacity to build out even further. It's currently not at the stage that it's reaching up to 1 million, and who knows if NIO will reach it, but I think that's the potential for F2. And again, for F3, I think it will be higher. So I don't take those reports yesterday for much. I don't think there is much truth to that currently. Maybe they did get some sort of an approval of regarding the license for that factory. I think they bought the factory actually from a bankrupt company like Leopard Motors or something like that. Licenses are important in China. So yeah, but that's just the news on the factory and how I saw that. Anyways, let's call this a live stream. That was 1 hour going through the earnings report and some of your questions. Again, to summarize it, pretty much in line with my expectations, with analysts' expectations. It's not a outstanding turnaround, surprise, positive report, but it was kind of expected that it wasn't going to be that. So looking forward to Q2. That one could be fine, could be great. I think the guidance is good. my positive takeaway of this report was the investment, that we now have a figure for the valuation, putting it roughly at more than $1 billion of valuation by equity investors. So that's telling you possibly that some of the value in NIO hasn't been unlocked yet. But who am I to say? I'm just somebody who's invested in NIO and likes the potential of this company. Always do your own due diligence. I hope these videos can help you doing just that. And with that, I'll close it here, and I hope to see you in my next live stream, where I'll live stream the earnings report, and I will give you my commentary on top of that. Again, if you're tuning in later now, this has been a live stream, but will be recorded. So same for the next one. Thanks, everybody. See you in a bit.